Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market found responsive buyers again at that 81.5 to 83.5 area and returned back towards the recent balance area high. At this point, heading into the open, short term, we know that the market is stuck in balance, but it is setting up for a directional move. And since this is happening within an overall bullish context, we are going to continue favoring the buy side and focus more on long setups unless there are very clear signs that this is turning out to be a failed breakout attempt. But we would have to see some pretty decent weakness and some strong rejection across the board in the S&P as well as the Russell and Nasdaq in order to switch our bias to the downside and become bearish. Until then, as long as the market's holding above pre-market support, 86 to 88.5, and even the 81 to 83.5 initial support, the buyers can maintain control, and our bias is going to remain bullish, and we're going to focus more on long setups. So essentially, the context heading into the open is the market is very balanced. It is stuck in a range, but it is setting up for a directional move, and we are going to favor a upside breakout. So then we just have to monitor the internals and the price action in real time to determine whether the underlying environment is really supporting the idea of an upside breakout and whether there is sufficient underlying strength to really not only result in a breakout, but a sustained breakout, right? So a sustained move to higher prices. So from here, as long as we get broad market strength, sustained upside momentum, then we can break above 94.5, above 96.75 to 98.75, and on the upside we can go up to 0.3 quarter to 0.5 quarter and 0.875 to 10.75. Now, if we are breaking out on high momentum, then 0.3 quarter to 0.5 quarter may simply be a pause point or a place where the market balances a little bit before it goes higher into 0.875 to 10.75, and then the final zone would be 15.5 to 17.5, which marks the all-time high. The market does not have to go all the way up there necessarily today, just because of limited range potential, and especially if the volume doesn't really expand off the open. But 0.875 to 10.75 is an area that can get hit in the event of a strong upside breakout on some decent volume. On the downside, like I said, ideally you want to see ES holding above 86 to 88.5. A break below 86 to 88.5 would put the whole breakout scenario into question, but from there on, buyers can still be active at 81 to 83.5 and even at the 78.5 high volume node, and then the market would continue to be trading within a range and stuck within a balance. But even if we get a deeper pullback, it doesn't necessarily mean that we have to then get a balance breakdown. Buyers can still step in at 81 to 83.5 or 78.5, and then the market can continue balancing within a range. But ideally, you don't want to see too deep of a pullback. Ideally, you want to see ES holding above 86 to 88.5 if we are going to get that upside break. And if we're going to get a strong upside break, we may not even pull back to 86 to 88.5. We might actually continue balancing near the highs and then actually break out to the upside. So the underlying environment is supporting an upside breakout. That's the one that we're anticipating, and that's why we're going to keep our focus on the long side and be careful and cautious on short setups. The only time that it makes sense to short the market up here is, again, if there's just a lack of strength or just outright weakness, and it's shaping up to be a failed breakout attempt. So that would be the only time where we would consider shorting the market. But unless we see any clear-cut signs indicating a failed breakout, like lack of momentum or negative momentum, we're going to keep our focus more on long side, especially above 86 to 88.5. So those are the main ideas heading into the open. Let's see if the buy side can maintain control, and we'll take it from there.